Well, let me thank Bob for inviting me, and thank you to those of you who stayed and didn't disappear. I know I'm the last speaker, and this is a market analysis, but I'm going to use lots of charts, and it will show you why prices have rebounded from the lows we saw in 2008 and what's ahead of us. Let me start with a disclaimer. I'm not a trader anymore, but it's usually good to start with a disclaimer that whatever I say and whatever you see on the screen does not constitute an advice to buy or sell commodities, equities, or foreign exchange. This evening I'm going to look at oil market update, price, market in general. Look at the drivers that are driving the price, the development of the last year, oil field demand, supply, inventories, look at some weather, economy, equities, and then Bob also asked me to look at the US financial regulation reform. You could have seen it in the news over the last couple of days, so I'll just tell you what's in the reform, whether it will have any impact on you or Bob. So we'll start with the drivers. I used to trade oil, electricity, natural gas, coal back in London, and we would split the drivers into fundamental and technical drivers. The fundamental drivers are the usual supply and demand, capacity, production, inventories, production costs, alternative fuels, geopolitics, activities of major players. You could hear the names of OPEC, hedge funds, commercials, speculators driving the markets, weather and seasonality, world economy, consumer confidence, consumer sentiment, expectations, retail sales, the US dollar versus other currencies, equity and commodity markets, and any policy, fiscal, monetary, and regulation. And then adding to the fundamental drivers are the technical drivers. Those are the ones that the traders who are managing big portfolios with about $450 billion and more use. So be trends, averages, a relative strength index, MACDs, Fibonacci, stochastic oscillators, and volatility indices. So we will look at the heating oil price history, and you can see that it's been steadily rising since hitting bottom on the 11th of March 2009, and today was trading around 223. You can see that it's been a steady move, few dips, and it's been a very steady fall from the highs of $4.1 to about $1.13 per gallon, and a steady recovery. Now, you can't see from the chart what's going to happen. You can see what's been happening, but it leaves the question mark, what's going to happen. We will look at some of the forecasts that the Energy Information Administration is putting out, and you can see that they're forecasting prices to move steadily forward. So for those of you who are whose houses are heated by heating oil, according to the US Energy Information Administration, should be paying fairly stable prices, steadily rising prices. But you could see, if you look at the price history from 2006 to 2010, that prices are never steadily rising. So the likelihood of prices steadily rising like that is very, very low. Prices either go dramatically up or dramatically down, and that's only due to either fundamentals or the technical traders. I'll look at some demand charts now, and you can see that the global fuels demand dropped in 2008 and 2009. For certain countries like China and India and the Middle East, demand never dropped actually, that was still growing. But the United States and the OECD countries, which is a bloc of 30 richest countries, the demand dropped quite dramatically in 2008 and 2009. But it's supposed to recover in 2010 and 2011. and the EIA is expecting demand to be hitting record highs again in 2011. You can see that the growth of for US, which is the middle bar over here, is very small compared to China, which is the blue one, and the other countries. China is a favorite country to blame for the additional demand, but it's a fact that you have 1.2 billion people, and everybody's going to be buying cars. Everybody will need fuel, so whether you like it or not, the demand is going to rise. And then you have the likes of India, Bangladesh, and all of these countries whose population is 300 million plus. That's more than the United States. This is the global demand growth, and you can see the United States for 1996 to 2002 rising steadily, and then 2000 to 2008 small increase, and then quite a drop from 2008 to 2014. It's not only high oil prices, but also conservation measures. As you move towards new technologies, alternative fuels, you tend to use less fossil fuels. But there's a massive increase in Latin America, Asia, Middle East and Africa. Europe, similar to North America, has peaked with regards to demand and is falling. And that trend is going to continue. The big story, as I said, is China. China oil demand up 19% year on year. The Chinese economic policy planning is quite interesting because anything below 2 digits is disappointing. So when they do a budget for economic growth, gross domestic product, they always target 20% or at least 10%. And when they came to about 12% last year, people were talking about global depression or global recession. But there's quite a few countries around the world never dipped into any recession. Recession is when 2 quarters successively the growth is dipping below zero. But China never dipped below double digits. You can see the oil demand came off slightly, but it's ramped up quite dramatically. And then this is the gross domestic product and industrial output. Again, that dipped slightly, but look at that, it's still about 6-7% for those 2 quarters, and then ramping up. Similar to US, they also pumped quite a substantial amount of money into the economies. It was about $675 billion, slightly less than EU, but also on top of that, on top of this fiscal stimulus, they used quite a hefty monetary stimulus, whereby their banks were in very good shape. China is the biggest saver in the world, and they own quite few American companies, and they were able to ask the banks to lend quite heavily, and that's what they did, and that fueled the growth further. Now, if you look at the US oil products demand, you'll see that the 2010 level, which is red, forecast is still very depressed. And the US is still the largest user of oil, and therefore is a very important player in the market. This is the total product, so there will be crude oil, heating oil, gasoline, diesel, and this is heating oil only. You can see the depressed levels, and the warm weather over the last few years didn't help it. We can see in our portfolio of clients, they reporting demand down by as much as 20-25%. It does vary, but the demand is definitely lower than what it was in 2008, 2009. There's an expectation for a recovery. We can debate how strong the recovery is going to be, but the expectation is that the economy is going to recover and the heating oil demand is going to recover.